Kathleen, Wall Street might be looking more downbeat on China, but feeling more upbeat when it comes to the odds of a soft landing. The US Goldman, for example, cutting those recession risk probabilities and also saying, don't worry so much about the inverted yield curve.
Well, let's start from the top here. Janet Yellen, of course, said that she thinks one of the reasons the U.S. will avoid a recession is because the labor market is still so strong. And even though there are definitely risks that a China slowdown affects the rest of the world, it certainly affects the economies in Asia, but it is something that reverberates. Now, I think it's interesting, Jan Hatzius, who is the chief economist at Goldman, made a little reduction in his recession odds. I guess it's about, 20%. He went from 25% odds to 20%. So he's inching his way in that direction. I think there's a lot of people who've been ahead of the curve when it comes to saying no recession, but we still don't know if they are correct. Now, in Jan's case, he says that it's the recent inflation data. Look how much CPI came down. It peaked at 9%. It's down to 3% on the headline. Of course, the core is still about 5%, too high for the Fed. But he's more confident that a recession won't actually be needed to bring down inflation. In other words, if it is needed to keep hiking rates, the Fed will, and they'll let the recession happen. But the inflation data may be helping them out there. He thinks, in fact, that the July hike will be the Fed's last. And that's another thing people are debating just a bit. It's hard to say whether or not inflation is going to continue to come down. There's some great base effects, et cetera. But BofA noting that the credit markets are being affected by this view among investors that recession odds are less likely and these Fed rate hikes will stop sooner. Retail sales out tomorrow, Heidi. That'll be on the important side to watch because it's supposed to be up about 0.5%. The issue here is that it'll be a lot driven by car prices, new car prices, and manufacturers cut those prices a lot to get people to buy more. So that might be something that, as Bloomberg Economics says, is going to mask the fact that there's dynamics here that the consumer is going to keep slowing ahead.